Are you tired of constantly watching your investments fluctuate with the stock market? It's time to consider a different strategy. In this video, we'll show you why investing in commodities like oil and gasoline can pay off big time and how you can take advantage of this lucrative opportunity. If you're a beginner investor and haven't yet started to invest, you can open your first brokerage account with Acorns and start your journey today. Click the first link in the description to know more. Now on with the video. Oil and gas production is a significant industry worldwide, with companies such as ExxonMobil and Royal Dutch Shell taking the lead. However, the mere fact that a stock or company is well known does not automatically make it a profitable investment. Due to the industry's recent turbulence, energy investors are uncertain if even top oil and gas companies are wise investment choices. In this video, we will examine if oil and gas stocks are reliable long-term investments that warrant a spot in your investment portfolio. Don't forget to subscribe to our channel and hit the notification bell to watch our latest videos as soon as they are released. Fossil fuels, particularly oil and natural gas, continue to be in high demand as they are usually more affordable than alternative heating and transportation fuels. Additionally, they possess a significant infrastructure advantage over emerging clean fuel sources, such as renewable energy. However, investing in oil stocks involves more risk than other sectors of the stock market because the industry has several additional risk factors. These include cyclicality, which means that investors will likely experience periods of booms and busts in the industry. Volatility is another concern, as oil and gas companies face factors beyond their control that can have a significant impact on stock prices. Uncertainty is also a factor, as oil and gas exploration is unpredictable, with the inherent risk of significant losses from investments that do not yield results. Moreover, environmental issues, such as the emission of greenhouse gases during the production, transportation, and combustion of fossil fuels, are now major concerns. Governments are increasingly pressuring companies to decarbonize their operations, and as such, demand for oil and gas is likely to decrease in the coming years. Safety is another factor, as the machinery used in extracting oil and gas is heavy and complex, and a misstep can have tragic consequences, such as in the Deepwater Horizon oil spill in the Gulf of Mexico in 2010. When all these factors are taken into account, the oil and gas sector remains one of the riskiest sectors for investors. However, it is crucial to note that some oil and gas companies are safer investments than others. Comment trading if you would like us to make more videos like this in the future. The oil and gas industry is not immune to financial risk, and as with most industries, size matters. The oil super majors and other large players such as ConocoPhillips, Kinder Morgan, Phillips 66, and Schlumberger have global operations and revenues exceeding $100 billion, which makes them less risky investments compared to smaller companies. Strong balance sheets and market capitalization are critical factors for the survival of small oil and gas companies, as price declines can drive them out of business. For instance, several smaller E&P companies filed for bankruptcy during the coronavirus pandemic in 2020, while many offshore rig operators went bankrupt in 2014 due to low demand for their services. However, being large doesn't guarantee future stock performance. Thus, investors must carefully evaluate companies based on their potential to perform well in the future. Don't forget to like this video if you've watched it till now, as it inspires us to make content like this. Oil and gas companies have the potential to offer investors significant capital gains in the form of share price appreciation and high dividend income during times of high oil and gas prices. When oil prices rise, oil companies have more cash on hand, allowing them to invest in drilling new wells, increase production, reduce debt, buy back stock, and pay dividends, all of which can benefit shareholders. Due to the high amount of cash flow generated during these good times, dividend payments in the industry tend to be higher than average, making it an attractive option for investors seeking high yields. Investing in oil and gas stocks during economic growth periods can potentially provide significant returns. Thus, investors who are willing to take on some risk may find oil and gas stocks to be a wise addition to their portfolio. Investing in commodities like oil and gasoline can be a complex decision with both risks and rewards to consider. The oil and gas industry has significant volatility due to factors such as cyclicality, volatility, uncertainty, environmental concerns, and safety risks. These factors make oil and gas stocks some of the riskiest sectors for investors, especially for smaller companies that lack the market capitalization and financial stability of larger oil supermajors. However, some oil and gas companies can provide significant capital gains from share price appreciation and attractive dividend income during periods of high oil and gas prices. For example, during the oil boom of the early 2010s, oil companies such as ExxonMobil and Chevron saw their stocks soar to all-time highs, resulting in substantial gains for shareholders. Moreover, oil and gas companies can be attractive to investors seeking high dividend yields, given the amount of cash generated during good times. It's important to note the industry's upside potential during periods of economic growth, and thus oil and gas stocks can be smart investments if timed right. For instance, when the economy transitions from a recession to an expansion, investing in oil and gas stocks can turn out to be a wise move. Nevertheless, investors must not attempt to time the market and should always prioritize a long-term investment strategy. In conclusion, while investing in commodities like oil and gasoline can be risky, a well-diversified portfolio that includes top-performing oil and gas companies can offer attractive returns for investors. Investors should always consider their risk tolerance, investment goals, and overall portfolio allocation when making any investment decisions. So that's it today for you guys. And don't forget to check out Acorns by clicking the first link in the description. Thanks all. Bye.